All right, guys, welcome to a case study of a trade I missed. As I said, it's quite hard to get into the flow of trading when you're so busy, and I kind of misread the price. I saw this area; it's not really in a discount premium area. It's on EU. It was on Friday, and I said to myself like on GU, and I said to you guys in the pre-market analysis, on GU I'm looking to short from this area. However, on EU, I somehow told myself I couldn't do that, therefore I missed that trade. Well, it's pretty clear. We break it down from the daily time frame to the lower time frames for my charts. Oh shit, it's a bit off. I don't know what's going on. Whatever. Let's break it down. So, bear structure. We broke below. We're looking for longs. We got that realignment there. But we know that we still have liquidity to the downside. We still have reason to go lower as we had previous weekly lows down here, and we didn't reach back into that discount pricing of this yellow range to the upside. Then going down lower to the 4 hour, what can we see? That we broke bullish, and essentially we had some form of internal range liquidity there. Well, if you just take that away and focus on the fact that we had Asia low and previous daily lows down here, and we had that liquidity building up there that could function as internal range liquidity before we move along, then you have a nice target. I'm removing all the stuff to trade target to trade to. Yeah, and then a nice target to trade to. And there's like not really any further internal range liquidity in this range. If we go to the 15, we can see, yeah, we have some here. We have this huge gap here. But other than that, it's not really something you can trade from. Essentially, this was the one that the area that pushes lower, so to say, and that pushed us down to build up internal range liquidity. As in, this is my internal range liquidity, like that. But then we got Asia lows formed, really ugly. We got previous daily lows formed, and then we got that push to the downside around Frankfurt, and then around London Open. Yeah, London Open. We turn around, we cut to the upside, and this is where the entry drill presents itself. So we got a high. This is like how it should be read correctly. Highlight. We have a high, we have a low, we have a lower high, and then we have our lower low. And this is our lower high, and then a lower low, etc. Gonna mark it out more clearly with this. So we can use the 15. Push this to the side. High, low, lower high, and a lower low. You can see that inside this area, we have a nice 50-minute PY. Price came above that. So do more detailed research. Where did that move come from? It's that area. Now, then we go lower again, see what's there. Nothing there. Actually, let's zoom in. Yeah, so that's just mitigated, but it's a nice wick. You could take that. Probably something on the... Yeah, so there's a 1 minute block in there. That's where the move came from. Not really of interest. Why not? Because this is the area where it comes from. So we have Asia highs being taken out. We got Asia lows still being intact. We got more liquidity building up to the downside. We got previous daily lows. So we got Asia low, previous daily lows still being intact. We know that we have higher time frame liquidity. So those are already some points. Then we reach into the 50% of this 50-minute demand supply zone. In addition to that, we have DXY. And what was DXY showing us? It reacted from kind of the same area. DXY had that new daily open gap that was still intact as well. So we took the lows, we got that high or low, high, higher low, higher high, higher low, new daily open gap still being intact. Asia high, Asia low, still being intact, Asia low being taken, early buyers, EU early sellers, and then this is where the move comes from. That will actually, I think this will be too messy, but let's just zoom in on that. Zoom in on the area, early sellers, and then the only thing we have to look for is a bearish break. And then even keeping the internal range liquidity in mind, it would be this low up to this high. So even if you just target this, it will be low, high. Okay, didn't return there. Let's zoom in a little bit so it's more visual. We go again, low, high, higher low, higher high, higher low, higher high. What happens next? Bearish break over here. Last demand zone, supply zone, entry area. Want to be more sure or be more secure or safe because we got some liquidity building up there. We got more than enough liquidity building up here to target, and we got that 50%. So if you want to be sure, there's short trade. Sorry, it's not my colors. I'm using different colors. 53, 43. There we go. Sorry, it's different. Put it above there. 85, 90. There you go. Go break even here, or you can go break even after the break. Target 124 is targeting just below that internal range liquidity. Actually, quite some distance below that. That's one. Then your next target is Asia lows, 1 to 5 hit. Previous daily lows, 1 to 6. Target at liquidity, 1 to 7.5. And where it actually came to is a 1 to 12.5. So yeah, that's a trade. Hope it made sense. Really quick breakdown. Bearish structure, above Asia highs, inside the 50% of the supply zone. There was a 1 minute PY. It doesn't count as a confluence. But we had DXY lining up as well. We had internal range liquidity still to be targeted from this way up. So this is where the move up begun. So essentially like this, and you want to get the low taken before we get the move. So yeah, ideally this would be your target. A nice 1 to 7.47. There you go. And that will be your trade. And yeah, that's it basically. All right, peace out, and I catch you guys later. Peace.